You deserve a raise, man. That's really good. First of all, it's an honor to be here with all of you today. Obviously, the Economic Club of Miami that was founded by all of you, my friends, and Jeremy, who works with Murray and Jeremy. If I don't introduce Jeremy, I'm in trouble. And Anthony and Sam, thank you so much for believing in our city. A year ago today, at about I think it was 8:30 at night, I was hanging out in my room, in my bedroom, and I was looking at Twitter, and I saw a tweet come across my timeline and said, "Hey, what if we bring Silicon Valley to Miami?" And I very innocently tweeted, "How can I help?" And it was a counter narrative to what was happening in this country at the time. A lot of cities in America were raising taxes. They were defunding their police, and they were pushing out innovators and creators like Amazon and Elon Musk. And for us in this city, many of which come from communist countries, we realized that it's counter to the ethos of this country, and what this country was founded on, and what this country was built on, which was the free market and capitalism. And so for us, it was just very natural to respond in the way that I responded. We responded as a community like that every day, and all of the people who have come here to Miami in the last year can attest to that Miami has a how can I help mentality. We want you to succeed. Our government wants you to succeed. And to the extent that we exist as a government, it's either to facilitate or to get the hell out of the way. And that's what we think is going to bring the most prosperity to the most number of people. There's this mistaken notion in America that prosperity comes from government, that government can create some level of equality. And what we've seen in the history of humanity from the country that my parents came from is that any government that tells you we can take all your property, we can take all your businesses, and we'll create equality is one you should run very, very far away from. But some of the KPIs of what we've accomplished here in Miami, in just over a year, we've transferred $1.2 trillion worth of assets under management companies to the city. We have been ranked #1 in the nation in tech job growth, #1 in the nation in tech job migration. We were just recently ranked the happiest city in America, the healthiest city in America, and #1 in pandemic recovery. And on January 3rd, thanks to the mayors of this country, I'm going to be named the president of the U.S. Conference of Mayors. And I believe that the how can I help ethos, how can I help mentality, the how can I help brand that we created here in the city of Miami is something that we have to scale nationally. If we do that, we're going to create an agenda for this country that's going to provide prosperity for more and more people than it's ever done before. And it's hopefully going to be able to help tackle some of the things that we've seen as generational issues, like the income inequality that I know bothers a lot of us when you see particularly people who are struggling and don't have the same economic opportunity that maybe many of us have. But it's not going to happen because of the government. It's going to happen because of leadership. It's going to happen because of the private sector, and it's going to happen because of innovation. We are the laboratory here right now, and if you need any more evidence of it, go to some of our Boswell tech parties tonight, and you'll see that Miami is the epicenter for innovation in the world. It didn't happen by accident. It happened because of the collection of people in this room, because of those who decided to dare and to dream and to understand that each and every one of us has etched inside our soul what we know of as the American dream. And that's not something that we should feel guilty about. That's something that we should be proud of. So I'm extremely bullish about my city. I'm extremely bullish about being president of the U.S. Conference of Mayors, an organization that represents 85% of the population of America and 91% of the GDP of this country. And I know that if we're smart, and if we follow the simple rules that have made Miami a successful city, then we're going to create prosperity not just for our generation, but for my 7-year-old, my 3-year-old for his unborn and her unborn children. Which, by the way, I asked my 3-year-old today, how many babies do you want to have? She said 5. Because I can count to 5. So her 5 unborn children and their grandchildren. That's the challenge that's before us. It's about getting ahead of that disruption, getting ahead of what for many is a fearful disruption. But for us, it's a disruption that we're going to embrace with energy and enthusiasm and with the knowledge that if we work hard and if we care for each other and if we innovate, we're going to have the most successful city and the country on the planet. God bless you and thank you.
Thank you so much, Mr. Mayor. This is incredible. Welcome, everyone, to the inaugural Economic Club of Miami event. We're so excited to have you here. We're really excited to have this interesting discussion today on NFT and the art of NFT and the future digital assets. We are all here in Miami, downtown Miami, just at the tail end of our Basel. We've got this really interesting group of speakers here. For those of you who are wondering what is the Economic Club of Miami, what it's all about, the Economic Club of Miami is a new organization based here in Miami that is dedicated to promoting networking and thought leadership. So again, we're super excited to have you here. A lot of other cities have started these similar sorts of organizations. We really think that Miami particularly deserves one, especially with the enormous growth that we've seen in Miami. So without any further ado, my name is John Hartley, by the way. I'm the chairman and one of the co-founders of the Economic Club of Miami. So today we have on our panel, our very distinguished panelists, we have Bankman-Fried, who's behind me right now, who's the CEO and co-founder of FTX, one of the largest cryptocurrency exchange in the world. We also have Anthony Scaramucci here, who is the co-founder and managing partner of Skybridge Capital, which is a fund of hedge funds, also one of some of the largest Bitcoin hedge funds in the world. We've also got Kathleen Breitman here as well, who's the co-founder of Tezos, one of the largest cryptocurrencies in the world. So if we could give them all a round of applause, please. All right, so let's start with you, Kathleen. You are here in Miami. Well, not only you're also a resident of Miami, recently a resident of Miami, and you are sponsoring a very special exhibit here at Art Basel, which I believe is the very first NFT exhibit ever at Art Basel. So I'm curious, like for those of us, because many here are totally new to this concept of cryptocurrencies and NFT, can you explain to all of us what is NFT? Why are people buying NFTs? And tell us a little bit more about your exhibit here at Art Basel.
Yeah, well, first and foremost, thank you so much, John, for inviting me, and thanks everyone for being here. So basically, NFT was very much served as word of the year, which is funny because it's an acronym, and it means non-fungible token. And so basically, this is an idea that's born out of the blockchain space, whereby you have receipt of ownership of some sort of digital item that rests in a decentralized network. So it's a pretty abstract concept. But the great thing about the exhibit at Art Basel, which showcased this technology using the Tezos blockchain, was that we basically allowed people to create their own NFT in 30 seconds or less by using a input from an algorithmic artist who publishes a bunch of digital art on Tezos, and they were able to capture it using their phone and trade it with anyone who they wanted. So NFTs, to me at least, are kind of like the gateway smart contract for cryptocurrencies, because there's this, gibberish about to words to people who don't necessarily know a lot of computer science, and now they just know that, like, hey, I got a cool photo and I can send it to my friends, and like it's almost instantaneous. But yeah, the headlines over the last few months, feels like years, have been mostly circulated around like how NFTs are a new way to basically represent digital ownership over an asset that ultimately sits on a blockchain.
So tell us a little bit more about this exhibit.
Yeah, I mean, pretty straightforward. The Tezos blockchain has a number of really prominent digital artists who, I guess until maybe a few years ago, kind of struggled to coordinate and sell their work in a certain forum. And they've kind of convened on different marketplaces. One of the most popular ones is called Kik. And so basically the Tezos Foundation partnered with Art Basel Miami to basically make an interactive exhibit for everyone who came through there, using some of the artists who were showcased from Kik and basically allowing these people to create their own NFT as part of the exhibit. So it was both educational and interactive, and apparently it was the most popular booth at Art Basel. So that was hugely exciting and wonderful for us.
Well, congratulations, Kathleen. That's amazing. So to sort of, and one, I think it's fascinating how the NFT world is sort of converged with the art world. For those of you that aren't aware of what Art Basel is, especially those joining us virtually, I think it's amazing how Miami has become not only sort of the center for art, but also the center for digital assets as well. And so that I think sort of segues us into my next question for Sam. Which is, could you explain to the audience, again, some of us here being laymen's, what are cryptocurrencies? What are cryptocurrencies, and can you explain to us a little bit about FTX?
Sorry, could you explain to us a little bit about what cryptocurrencies are and what FTX is doing, and how can people invest in cryptocurrency if someone's totally new to the idea of cryptocurrency? ETFs. Should they be going something like a Coinbase? Should they be trading futures? How do those different ways of investing in crypto work?
Totally. So, cryptocurrencies, they're new digital assets that generally are transferred along a blockchain. And what that means basically is that rather than having a government or a company sort of decide or ultimately make a list of who has how much of it, like governments with dollars or other fiat currencies, there's basically a global algorithmic decentralized network that maintains everyone's of these assets. And Bitcoin is sort of the most famous and prominent of. There are a number of other ones like Ethereum, Solana, Dogecoin. And one of the nice things about investing in cryptocurrencies relative to other asset classes is that the way that the ecosystem has evolved is that it's disintermediated. And what I mean by that is if you wanted to buy a share of a stock, of an equity, you would have to go through like 6 different intermediaries from start to finish between global brokers, a payment for order flow firm, some ETF, another PayPal firm, stock clearing, stock loan. When you invest in a cryptocurrency, you can go to the venues that sell them. And you can create an account rate on those and purchase it through that. FTX is one of those. That's the one that I started, but there are a number of them. And Coinbase is another one of the prominent U.S. exchanges. You can just go to ftx.us if you're in America, and you directly create an account there. We have lots of ways to fund your account, lots of ways to buy. Bitcoin ETFs are, in theory, a pretty convenient way to buy cryptocurrencies because you can buy them with your normal brokerage accounts. Right now, it's a little bit difficult and expensive to do so because the ETFs that you're allowed to buy aren't allowed to actually own Bitcoin for regulatory reasons. They have to buy futures on Bitcoin, and they end up paying a lot of premium and rolling costs of doing so. But I'm optimistic that over the next few years, that's going to change and they will get more in line with other ways of purchasing a Bitcoin.
Fantastic. Thank you so much, Sam. My next question here is for Anthony. Obviously, Bitcoin, I think, is become one of the most popular cryptocurrencies and digital assets out there. Anthony, you run one of the largest Bitcoin hedge funds in the world. I'm curious, so for those that follow cryptocurrency over the past day or so, we've had a bit of a Bitcoin sell-off. Some people would say, maybe this is a buying opportunity. Others would say, the end is nigh. Bitcoin obviously has many of its fair share of critics. People, complain about, is it a good store of value? Economists like to think that, a currency has to have, one of those properties that a currency has to have is being a good store of value. What do you say to those critics, and why should people be investing in Bitcoin now? And what do you think about some of these sort of forthcoming regulations that we're hearing from the SEC maybe next year? Do you think that will help the price of Bitcoin or hurt it?
So let me just step back a little bit, because I want to tie in what Sam and both Kathleen are saying. So the revolution known as the blockchain, what Sam is basically getting at is just a massive delayering situation for the society. And so we'll be able to cut out intermediaries, middlemen and women. We'll be able to save tons of costs. And so what Sam's working on at FTX is nothing short of revolutionary. Mark Andreessen said about the blockchain, once he fully understood it, it was more important to the world than a Netscape browser in 1995. So I just want to step back. Sam is basically telling you, you want to trade a stock right now, it goes through 7 entities. Someday, using the blockchain, you're going to go 1-to-1. We may even be able to trade our bonds into stocks using the blockchain. And so there are many different cryptocurrencies. I know Sam likes Solana and a few others, Bitcoin, etc. Kathleen is developing a layer 1 protocol, which is extremely fast and has very low transaction fees. She has an amazing community. And so Tezos, is that how you pronounce it, Kathleen?
So I pronounce it.
Okay, all right, so Tezos will likely be a very big part of the future. For me, when I look at Bitcoin, I see the early invention of the blockchain, and I see Bitcoin long term as being a store of value. But today, I see Bitcoin as an early technology adoption story, and it's arcing pursuant to the Metcalfe's law. And so, if we were having this conversation a year ago, Bitcoin probably had 90 to 100 million wallets. Glassnode is now saying there's approximately 240 million wallets. And if Kathy Wood is correct, by the end of 2025, there'll be something like 1 billion wallets, and if that's the case, Bitcoin will probably have a price somewhere near $500 million a coin. Just want to make one quick point. I don't see Bitcoin right now as a store of value. I don't see Bitcoin as an inflation hedge. One of the funnier things on Twitter this morning when I looked at the Bitcoin mini crash, somebody said, I'll take the inflation, meaning if you're dropping 25 or 30%. But Bitcoin long term will be that. It just needs to scale and become more adopted globally. I just want to resonate with everybody here how early we are. With less than 2% global saturation and all of the regulatory things that Sam is referencing, we need to untangle. These are very, very early innings for Bitcoin, Tezos, and other cryptocurrencies.
Well, that's a fantastic answer. One thing I also want to mention too about Anthony is that he runs this fantastic series called Salt Talks. He also runs something called the Salt Conference, which is held annually. And it's actually, Salt Talks is actually sponsoring this event as well. And he's got a lot of great content on this very topic if you're interested. You can find Salt Talks, I think probably salttalks.com. That sort of pivots me to my next question here for you, Kathleen. So you co-founded Tezos, which is also one of the largest cryptocurrencies in the world, next to Bitcoin. What makes Tezos different from Bitcoin in terms of its protocols, and how can a layman understand that difference?
Well, thank you for asking. So Tezos was proposed in 2014, and basically the genesis of it is that Bitcoin lacks a mechanism to upgrade itself. And so what Tezos does is it basically provides a forum for ratifying upgrades to the protocol that needs to have the consent of most of the token holders in order to instantiate. And that's the idea behind it is to basically make it future-proof, so you have an upgradable version of a cryptocurrency. Tezos also supports smart contracts, which are basically a way to add conditions to an exchange of tokens in the ledger. So basically, it's like a programmable money that can sit on the internet. And so the Tezos blockchain has upgraded 9 times, most recently late last night while the price of Bitcoin was tanking, and so, which was doubly exciting. But all that's to say, a lot of the improvements have been on the technical side of things, but they require ratification from token holders. Around 80% of the people who own the token have to basically say, like, yes, I approve this in order for it to happen. So, yeah, that's kind of the genesis behind it. It's a pretty simple idea, actually.
That's a fantastic answer. So, sort of pivoting, so we've got Bitcoin, we've got Tezos, and we keep hearing more about these crypto regulations coming down the pipeline from the SEC. This sort of brings me to my next question for you, Sam, which is, what do you think about the crypto regulatory framework? How do you think that could impact the industry? Do you think it could be beneficial or detrimental? Sam, I think you're on mute.
Sorry, I am. I'm optimistic that it's going to be really beneficial, but honestly, we're going to have to see for sure. I think the arguments in favor of it are that right now there isn't a lot of regulatory clarity in crypto, especially in the United States, and that means that a lot of players are sitting on the sidelines right now who otherwise would want to be participating. So we talked to a lot of people who say that, look, I would be in crypto now if, I felt comfortable and confident in what that meant. A lot of big institutions saying that, but absent that, it's going to be tough for a lot of the biggest, pieces of money in the world to get involved. And that's where we are right now. But again, I'm pretty optimistic that over the course of the next, year or two, we're going to get more regulation, more consumer protection, that's going to create more clarity, and that we're going to end up in a much stronger place because of it as an industry. I think the biggest things that I'm going to be looking for is clarity around stablecoin regulation, especially things around audits of stablecoins. Market regulation for cryptocurrency platforms. Right now, U.S. platforms do not have clear market oversight, and I think the SEC and CFTC in some combination are likely to be changing that. And then looking at token issuances and what you should do if there are some security-like properties of a token that you are looking to issue, coming up with a registration scheme with that. Those, I think, are the biggest things that I'm anticipating coming up.
Great, thanks so much, Sam. So, pivoting here, I'm curious to hear all your thoughts here on this question of central bank digital currencies. We hear a lot about this, that the government or central banks, the Federal Reserve, or others have spoken about hypothetically creating a Fed coin or a officially backed digital currency that's fully backed by fully the credit of the U.S. government. If, for example, the Fed were to introduce a digital currency or central bank digital currency, or more governments around the world, or central banks around the world, we're going to start doing this, what implications do you think that would have for the crypto industry broadly speaking?
So, in general, I think that would be extremely bullish because it would further the future of cryptocurrency. You would probably have a smart wallet on your smartphone that had the U.S. digital dollar alongside of your other cryptocurrencies. And you'd be able to trade in between them. I think the likelihood of that happening eminently is unlikely. Could it happen over the next decade? Perhaps, but I think what's more likely is you'll see something like what Jeremy Allaire is doing at Circle, US dollar, digital coin. He's got $34, $35 million in that coin now, and it acts as a stable coin in a digital landscape, in a cryptocurrency landscape. And I think that's more likely right now. Remember, the Fed wire didn't start out as the Fed wire. It was invented by Citibank. It got adopted by the other banks, and then the Federal Reserve said, okay, this is interesting technology. We would like to regulate it. And so I think the private sector is going to bubble up these ideas to the Fed it's not 100% clear to me that the Fed is going to invent its own coin. The United States usually operates from the private sector first to decide on that.
Sam, do you have any thoughts on CBDC, or Kathleen, do you have any thoughts on CBDC?
I think I mostly agree that it's most likely going to be the case that we're going to see private stablecoins have the line spread the market for a while. I also don't think it's guaranteed. You could imagine that changing, but it's the most straightforward path for now, and that would be my guess about what we'll continue to see for the time being. I think we're going to see a lot of countries investigating CBDCs, but that doesn't mean that's going to be pulling the trigger on them. I think we're sort of a ways away from a position where, we should actually really expect to see, many major governments create a really functional digital currency, especially one with an open permissionless blockchain.
What do you think, Kathleen?
Well, I tend to agree with both Sam and Anthony, but just to clarify a few terms for the audience, basically a stablecoin is an approximation for representing something like the US dollar. So it can be done synthetically using cute little algorithms, or it can be basically have like a one-to-one reserve with a company that's registered and regulated. Or not, some people are trying it. But in any case, basically what you're getting is approximations. And what's interesting is like over the last year or so, I have anecdotal folks who are basically taking this in lieu of dollars, right? So it's becoming a pervasive way to kind of grow crypto adoption. And basically, I guess a few years ago, China was investigating making some sort of digitized remittance currency, and that certainly spurred a lot of interest from not just the U.S. as far as I can tell, but also from other Western nations. So the Bankman-Fried is prototyping some version of a CBDC using a public blockchain. Using at least Tezos in one of the experiments. So it's an interesting conversation because you never expect that in a million years. And so, I think we'll see how it plays out. But there's definitely a market for a very elegant version of transmitting dollars or dollar-like things to settle bills and all that fun stuff. Maybe it would scale effectively because of different regulatory, constraints. But certainly there's an appetite for programmable money. It seems as though the synthetic version of it has to stay for a while.
Can I just say one? I just want to say one thing. If a fiat currency becomes a cryptocurrency, it's not going to stop them from printing it. Just want to make sure everybody understands that. So we're still going to have all of those issues that we're worried about. We've had a 42% increase in M2 over the last 18 months. So just think about that for a second. The dollar volume in the world has gone up by 42% in 18 months. And that is something that all of us in the cryptocurrency market is very worried about. Yeah, sorry about that.
So, sort of on that topic, El Salvador's made a lot of headlines, I'd say, in the U.S. Financial media recently, because El Salvador recently adopted Bitcoin as legal tender alongside the U.S. dollar. They've been using the U.S. dollar for about 20 years or so. One argument that I think people have been making in terms of digital assets going mainstream is remittances. And for those of you who don't know what remittances are, it's a fancy word for sending money back home. So, I'm sure there may be a good number of people here who are immigrants from Central or South America, in Miami here. It's actually a massive industry of sending payments from the U.S. Back to your home country. So, companies like Western Union, for example, it costs money to actually send money here from the States to them, especially if they're receiving it in cash, because a lot of people in South America are unbanked. Do you guys see remittances being a big sort of part of this story? If you're living in a country that's experiencing hyperinflation or something like that, imagine you're living in Venezuela 10, 20 years down the road and had a hyperinflationary episode. Do you see this sort of remittances or alternative store of value argument being one of those things that could help cryptocurrency or digital assets go more mainstream? Obviously, one of the biggest criticisms we often hear from the sort of establishment economics community is that it's not really being used too much in day-to-day transactions, though maybe it's being used as an investment, for example, in a hedge fund like yours, Anthony, or maybe others find Tezos on, say, FTX or some other wallet. What do you guys think about how digital assets could go mainstream in the future? And remittances may be one of those ways.
I'll be brief, John. I'll just say that El Salvador, they were estimating it would be $300 million of cost savings from remittances coming from expats over the United States back to their families in El Salvador. It turns out they got that wrong. It's a little bit more than $400 million. So you just want to think the magnitude of that cutout. Western Union is no longer participating in clipping those fees from people.
And they're big fees. It's like 5%. So like you send $100.
5% in market loss.
Exactly.
Just remember, we're in a bull market. The MasterCard and Visa, take a look at their stock charts right now. If there comes a time when we can disintermediate MasterCard and Visa at 3% revenue share that they get on everybody's restaurant, every retail store, if Sam continues to grow his company, which I predict he will, you'll be in a situation where you'll be able to pay people directly over the blockchain, and that is a massive savings for the entire world.
Kathleen, what do you think about digital assets and how digital assets could go mainstream?
I mean, I tend to agree with Anthony's diagnosis. Like, there's really an appetite for this, and we have the software and the technology to do it. It's just, I've been looking at this space for about 10 years, and like, I basically couldn't have predicted half the crap that has gone on. So I don't know how to go mainstream, but like, I do know that like, I wouldn't have predicted being at Art Basel Miami a few years ago. How many people made like their own generative artwork. And posting it as an NFT, like it's just you kind of have no. It's a very hard space to navigate professionally in some ways because it's very much reflective of the internet culture in a lot of ways. And there's clearly there's bones of like fundamentally very useful things. Effectively since the Crusades, we've been trying to find ways to move value around the world without the use or lessening the use of intermediaries, right? So like we're solving something with the blockchain that we've literally been trying to solve for hundreds of years. And the way that this manifests, and the way that people actually like rock it and actually wind up using it and thinking that it's better, it's going to be like a very weird, internet-based journey as far as I can tell. That's the only hedging I'll make.
Sam, what do you think about what sort of the best paths are for digital assets to go increasingly more mainstream?
Yeah, I mean, I think we absolutely may see it happen. And I think the biggest thing that I would say here is that in order for a digital asset transaction to really work the way that people are hoping it will, it takes two to tango. And what I mean by that, basically, is that in order for there to be a case where Alice buys some good for Bob and pays with digital assets, has to be the case that both Alice and Bob use digital assets and know how to accept them. And that's a pretty high bar. It's not an impossibly high bar, but it's certainly a high one. And I think that what that means is that it's going to be a while before before we really have as much adoption again as we were hoping in these things. Because even say 10% of the world adopting it, only 1% of transactions that could use it, but there's also a threshold, right? If you just keep plotting adoption, when you get to 30%, 10% of transactions can use it. It goes quadratically. And so I think that really does explode eventually if you can sort of build up enough.
Terrific. So before I start with our last question, which is going to be, what is it that drew you to Miami? We've got three people on this panel. One who's just bought the naming rights at where our beloved Miami Heat play. We've got a new Miami resident and a frequent Miami visitor. We also have a lot of financial firms obviously moving increasingly to Miami. I'm curious, I'm going to let you guys think about this for a minute. What your favorite thing about Miami is, or what drew you to Miami. And before I go ahead and ask that question, One, I want to thank everyone for coming, because we're also going to get into Q&A right after this as well. But for that, there's a number of people here to thank for this event. One, all the Economic Club of Miami sponsors and co-founders and board members who really worked hard for this event. Really want to thank Nitma Twani, the entire Paramount Miami World Center staff, Keith, everyone who's been fantastic with transforming this room. And if you guys could maybe give them a round of applause. And also, there are quite a few distinguished people here. I want to thank also the mayor. I want to thank a few congressmen who are here as well, and many fantastic people from Miami who are here. So I want to thank you all for coming as well. But circling back to that question before getting into Q&A, what is about Miami that drew you guys?
I mean, I moved here from Mountain View in 2017, and really California hasn't been doing so great since then. But yeah, I like the beach, and the food here is fantastic, and everything else is just icing on the cake.
Anything?
I came for the Cuban food and the tequila, and I stayed for the money. It's going to be the fastest growing city probably in the world because of the culture here. I want to applaud Mayor Suarez for what he's done here. It's been truly incredible.
If we get a round of applause from the mayor as well, that would be. And Sam, what led you to rename our beloved Miami Heat Stadium the FTX Arena? What led you to make that decision?
Yeah, I mean, we're really excited about the leadership we've seen in Miami, in the city and county, with the mayor and others. We're really excited about the growth that we've seen in the city recently. It's been thriving in a time when not that many cities are. And we're excited about the team, about the history and the future of the Heat. Having a great season, which is super exciting. And overall, it just seemed like a great fit.
Fantastic. Well, if you guys could give all of our speakers a round of applause right now. So one housekeeping note here is for those that are actually interested in Economic Club Miami events like this, we're going to be doing a whole series of events like this. We're going to be doing large speaker events like this. We're also going to be doing private dinners afterward and so forth. One thing we were wondering is, one, if you're interested in becoming a member and applying, we'll be circulating a membership form out to you to your email. If you sign up through Eventbrite for this event, you have your email and you don't need to do anything further. If you're interested in joining, please fill out this membership application that we'll be sending you in roughly a week's time. If you yourself have not signed up on Eventbrite, if you could actually please give us your email as well as your first and last name. At the front, we have basically a sheet of paper where you can put that down for us. That would be terrific if you're interested in becoming a member. So we're now going to actually, and Sam actually had to jump, unfortunately, but if you guys have any questions, if you could please actually just come up here just behind these last couches here and form a single line file. The trick here is it actually has to be one sentence question under 5 seconds. And that's how brief your question has to be. Because sometimes questions can become more comments than questions and can drone on. And for us, that would be terrific. But if you please form a single line after that, that'd be terrific. But if you could also get a round of applause again. We have one question, and if you please shout your question to us, that would be terrific.
5-second question. I am a small business owner here in Miami, and I understand that the NFTs are more of an investment proposition. Is there any impact on the way we how do you foresee the future and the way we work and the way we do business?
So I think the question is, what is the impact of NFTs and how is it going to change how we do business?
I mean, I don't think of them as an investment, opportunity. I think of them basically as a way to show that you want to own a digital artifact on a blockchain. Like, if it's as simple as that, you don't have to overthink it, right? But a lot of people, are basically trying to manufacture it so that it looks as though so that they'll have some sort of speculative value. It's kind of what you make of it. For what it's worth, I think that these digital assets are most powerful when they're uniting fan bases and allowing you to, basically support a digital artist you like, or, display your fandom to someone or another, or show that you're at a baseball game the right day. And I think it can be a cute part of your offering if you're someone who owns a beloved IP base. But at the end of the day, I think a lot about cryptocurrencies is their infrastructure, and infrastructure is inherently kind of boring. And if you keep it simple and you just think this is like really awesome accounting software, I think a lot of the hype and fervor and hyperbole kind of fades away to the background.
I think
We're going to stick with that answer. That was a good answer.
so we have one question. Yeah, you jump here.
Anthony, I want to ask you something. Where do you see regulations as we continue tokenizing hard assets?
I'll repeat the question.
As we continue to tokenize certain assets, and we want to open up secondary markets to the masses, avoid being certified investors, how do you see us moving so these tokens are not qualified as securities?
Yeah, that's a good question. The question is the future of tokenization and how do we move forward and make sure that some of these tokens are not qualified as securities as we start to tokenize and basically liquefy or unlock value in what was previously, say, illiquid assets. Is that the question, sir? Yeah. So it's a very complicated answer. I'm going to break it up into three parts. Okay, part number one: certain cryptocurrencies are going to be deemed intangible property. Bitcoin already is. If you look at it from the IRS perspective, and so things like Bitcoin will probably be treated like intangible, and therefore they won't have the security profile with the prospectus and all the things that the SEC would make you do. There are other things, however, and I've been working on the Algorand network with AXA as an example. AXA XL is in the process now of tokenizing art, the underwriting. We're talking about not digital art, but this would be the hard, bricks and mortar art, if you will. That will likely have to go through a securities protocol and will likely have to have a prospectus. So my answer, very complicated, it will not be one size fits all. My prediction is that half of this stuff is going to have to go through the SEC and be considered securities. You want to add anything to that, Kathleen?
No, I think the attorney gave a good answer.
We got one more question from the jump right here.
Let me get the microphone.
Besides the regulatory securities and IRS issues with cryptocurrency, what about the criminal and the involvement of cryptocurrencies and criminal activity? Where do you see the government's role and how do you think that that'll impact investing in cryptocurrency?
Can I take that one?
Yeah.
So I think everybody heard the question. It's about the criminality or the criminal use of cryptocurrencies. And I would encourage everybody here to read Mike Morell's 25-page white paper. You can Google it. It's available on the web. Mike was the acting CIA director for a period of time. He was deputy CIA director during the Bush years, during the 9/11 attack. Very well-versed guy. About 6 months ago, wrote a white paper on this very topic and delineated for people what is actually being used for nefarious activities. And what we find is less than 1% of the transactions on the blockchain are actually used for nefarious activities. And the main reason why is that the wallets are very transparent. You may remember the Colonial Pipeline transaction. $2.3 million worth of Bitcoin was taken by the FBI during that ransomware situation. So if you read that white paper, I think you'll gain more comfort that the blockchain cryptocurrencies that we're talking about will not necessarily be used for criminal activity. However, what is used for criminal activity, that would be the US dollar, and the dollar's in your pocket, in my pocket, or laced with cocaine. And we know that Miami Harbor is loaded with cocaine. Those fish are swimming pretty fast in Miami Harbor. So to me, I'm more worried about the dollar than I am cryptocurrencies, because we can track them from an FBI perspective, CIA perspective, way better than you would have previously thought. And I would encourage you to read that white paper.
All right, well, with that, we want to thank you guys so much for coming. Thank you guys for the next event. Thanks, guys.